Welcome to another premium update today on the 11th of October 2025. I did not expect to make an update today already, but a lot has happened in the last 24 hours. We saw a massive shakeout in the market. Most altcoins crashed massively, 50, 60, 70, even 90% for some altcoins. And now we've seen the recovery for many of them. Now it's always interesting to look at the leader of the crash. What's driving the crash? Bitcoin dominance actually went up. Ethereum dominance went down, Solana dominance went down even more, and the smallest altcoins, they got hammered the most. And what I think went on here is a deleveraging event of the perpetual futures on some of those smaller alts. But let's start with the chart that we always start with, Bitcoin with the best moving averages. We've got the 44-day in orange, so that's for everybody that trades Bitcoin with leverage, and we've got the line in turquoise, the 125-day simple moving average. We have closed the day below both of those moving averages, so it's time to hedge our spot holdings. It's time to potentially short Bitcoin. When we go long, we go 2.25x long. When we go short, we go 1x short. So that's also what I've done with the moving average trading vault. We are now short Bitcoin. Bitcoin, however, has not been the leader of this crash. The Bitcoin dominance shot up. Here's a screenshot I made just before the day closed. Bitcoin dominance appreciated, Ethereum dominance went down, Solana dominance went down even more, and the altcoins got hammered the most. The stablecoin dominance, of course, went up as well, but the altcoins lost more than the stablecoin dominance increased. Here are the relative valuations at the end of last day's close. Filecoin underperformed Bitcoin by 72%. And this was the favorite trade that I now recommended to everybody that's newly joined Premium. So I hope you made money and I hope that you also took profit. I did something very unusual, but times like this ask for unconventional measures as well. I've closed every single position in the relative valuation vault. So everybody that has deposited from day one is up 21.2%, while Bitcoin during the same time period went down by 4%. So since we started with the vault. And that's the whole idea of the relative valuation vault, right? We want to make money completely independent of what the market itself is doing. We're just betting on the bad altcoins to continue to underperform Bitcoin, Ethereum, and Solana. And we had been shifting more and more towards Bitcoin because we've already seen how Ethereum has rallied a lot and how now there seems to be more and more profit taking. So this is the Ethereum dominance. It's coming down exactly as we anticipated, and it might come down even further. Maybe not tomorrow, maybe not the day after tomorrow, but I think the long-term trend is quite clear because there isn't as many purchases through the ETFs and through the treasury companies anymore. We've talked about this in prior updates. The market is reducing risk. Here is Solana dominance. That's also coming down as anticipated. And here is the stablecoin dominance. It's in its trading range. It shot up massively during the liquidation event and now has stabilized again. Now it's important to understand how those movements actually happen and why I closed all of those positions just at the end of the day when we were very, very low in the altcoins. The reason why the prices are coming down is not because everybody is selling their crypto because they are so afraid of the tariff war that currently Trump again initiates with China. That's not the reason. The stablecoin market cap is still going up. Money is still flowing into the system. The reason for those extreme price movements come from leverage, and the leverage is mainly in the perpetual futures market. I actually made a video just on that before the crash. And the title of the video was quite lucky. Is the crypto crash coming soon? I talked about how leverage increases across asset classes, but how it's the highest for the smaller altcoins and how it's comparatively low for Bitcoin. Thus, Bitcoin dominance will go up in case of a deleveraging. And boy, have we seen a deleveraging event. This is ZK Zinc relative to the others market cap even. So this is relative to all the other altcoins, which already went down. This is a crash of 73%. And the charts all look pretty much the same. Here is Say, here is Matic, here is Wormhole. Just have a look at the magnitude of those crashes. It is absolutely unheard of. Wicks to both directions, everybody gets liquidated. Here is Optimism relative to the others. Here is Filecoin. Here is Meme. Here is Cake, etc. And so that's why it's so important to have a tight grip on what's going on. We took profit with the relative valuation vault over here roughly. Have a look at the others' dominance that also came crashing down. Now there are two important things to note here. First of all, many people got completely wiped out, or at least they are now in heavy losses. That means it might take some time until the leverage builds up again. But the overarching trend, and that's the second point, the overarching trend of money flowing into Bitcoin and flowing out of Ethereum and out of Solana is probably going to stay. The people that just bought the altcoins, that are not using any leverage, that have been part of the recovery again, they might be scared now because we have recovered, and since we are now still at relatively high prices, they might just exit the market. This was one of the fastest V-shaped recoveries ever. This was a true flash crash. This was a true deleveraging event. Just have a look at how much money the market makers made. This is the Hyperliquidity provider. So when people get liquidated, then of course the market makers make money. There was a huge jump in profit over here. But there's also some volatility. Have a look at this. In the last 24 hours, initially, the volatility worked against the HLP. But then, of course, as things continued to stay volatile, that turned around very quickly. Here is the all-time chart of the Hyperliquidity provider. The market makers made a lot of money today. And luckily, it's not just the market makers. Luckily, it's also us that close the positions relatively quickly. What I find very interesting, actually, is when we use the market close mechanism in Hyperliquid. When I had the open positions and I closed it via just the market close option, that actually the entirety of my position wouldn't directly get closed, only parts of it. So even Hyperliquid had a problem with liquidity at the time. Still, if you execute the orders often enough, it does come through at some point. Some centralized exchanges were completely down during that time. It's a testament to the Hyperliquid team that most things worked pretty well during this crisis. Here's Bitcoin relative to the others' market cap. I, of course, expect this to continue. And it just goes to show how much leverage there is in the market. So this is Solana. Solana crashed quite a bit, but the open interest on Solana went down much more. Have a look at this. Hyperliquid lost half of its entire open interest. So half of all the bets are suddenly wiped out. And since they are not just long positions, since they're also short positions, it's basically the shorts that made some money, but the majority of longs, they all went down to zero. Some altcoins lost open interest of more than 80%, while the price change itself was much less than that, right? Only 20% or so. But again, that's because of the massive volatility. The entire market had a huge scam wick, so to speak. This is Sui, one of the major altcoins, but also one of the altcoins with above average perpetual futures open interest. I talked about this in pretty much any Sui video on this channel. There's so many bets on the price, or at least there used to be so many bets on the price that pose a potential risk. When all the longs get liquidated, then naturally only the shorts are left over, and that then causes massively negative funding rates, right? When there's more shorts than longs and the funding rate gets negative, then the shorts have to pay the few remaining longs that are left over. It's very hard to say what's going to happen from here because so much leverage got flushed out. We don't know how long it will take until the leverage recovers again, until open interest goes up again. What we can say for sure though is that this event probably scared quite a few people. If you're over invested in altcoins and suddenly you see your net worth going down by 60, 70, 80%, you might reconsider your long-term allocation. My approach is to simply wait until the dust settles. We have locked in our profit. Funding rates have already normalized, but let's see what happens in the next 1 or 2 days. And then gradually, bit by bit, I will open new relative valuation shorts again. Again, Bitcoin is currently below both moving averages, so make sure you're properly hedged. But don't be surprised if suddenly we go above the moving averages in the next few days again. There is a potential for a short-term recovery. Again, because all of the leverage has already been flushed out. And so any additional sell pressure that comes from here has to go directly through the spot market. The perp markets don't have much more sell pressure left. A 24% drop in open interest for Bitcoin across all exchanges is massive. For Ethereum, it's 39%. For Solana, 36%. And as we go higher and higher the risk curve, the open interest collapse is larger and larger, right? The SUI example that we just looked at, that had half of open interest wiped out. Let's all stay calm. Let's see where the dust settles and then gradually enter into the market again. There's no rush into trading right now. In the end, we are betting on the long-term tokenomics, so on the supply expansion. We are not necessarily betting on the current momentum, at least for the relative valuation vault. That's different for the moving average vault, of course. Deposits for the moving average vault should be seen with a much longer time horizon, several years ideally. Deposits for the relative valuation vault can be seen a bit shorter term, because here we are working with a delta neutral approach. So approach that is independent of the overall market movements. Looking forward to your feedback directly below this video as usual. Looking forward also to chatting with you. See you next time. Cheers.